So we are looking at arbitrage, and what we said in this arbitrage, we said basically that arbitrage, it is the process through which an investor makes a profit by exploiting price differences of a commodity in different markets. So for example, where I come from, we sell a lot of bananas. We can only, in this case here, compete with the Merus in terms of selling bananas. So assuming, ladies and gentlemen, in the 𝐸𝐸 market, a good banana, for example, will be fetching something like 500, 800, etc. The same banana in Nairobi market, the same banana, for example, bunch of bananas here would be going for something like, say, 900. So if I'm able to rush to 𝐸𝐸, buy this banana, ladies and gentlemen, and sell these bananas in Nairobi for 900, make a profit, then whatever profit I make here by exploiting price differences is what we call what here? Arbitrage profit. So there's a process through which an investor makes a profit by exploiting price differences of a commodity in different markets. Tell us there that it is considered to be risk-free. Profit. It is considered to be risk-free profit. It is considered to be risk-free profit like that. So once, ladies and gentlemen, you're able to write up to here, could you kindly put your thumbs up? If you have been able to write up to here, kindly put your thumbs up. That's the best way of communicating. Great. Thank you so much. At least one person. Yes. So when we talk of international arbitrage profits, basically we are looking at what here? So when we talk of international arbitrage, so basically we are looking at selling and buying of what here? Different currencies with an aim of making risk-free profits like that. So selling and buying of because of international, different currencies with an aim of making a risk-free profit, ladies and gentlemen. So remember, these currencies will basically be going at different prices. If you look at, for example, a dollar. If, for example, today you go to bureau, talk of, for example, Equity Bank market called Equity Bank, and then we have the 𝐸𝐸. So the 𝐸𝐸, for example, so in this case here, you're looking at buying a dollar. Equity Bank, for example, when you buy a dollar from them, these guys here could quote like 138 Kenya shillings per dollar. The 𝐸𝐸 in this case here could easily give you these dollars at a better rate. Perhaps they may easily give you 140 Kenya shillings per. So you can see, ladies and gentlemen, $1, but coming at different prices. In those old days, what we used to do before regulation of these bureaus here by the central bank, we used to run, for example, very fast to a bureau in Eastleigh. We buy some few dollars there, and then we come to a bureau in town center and sell at a different price, at a higher price, and we're able to make profits without really sorting it out. So when you're able to move that way, then you make what we call risk-free profit. risk-free profit, risk-free profit, risk-free profit, risk-free profit, which is what here? Arbitrage profit like that. Now, ladies and gentlemen, remember, we have three types of arbitrage profits here. We have what we call, which is the easiest, the covered arbitrage, covered interest arbitrage. So under covered interest arbitrage, so remember here, we have something to do with currency. So we have in this case here, trade of currencies, right? And then number two, we have two countries where you'll be given what here, two different interest rates. So when you talk of a covered interest arbitrage model, what you're supposed to appreciate here is that we shall be making a risk-free profit by exploiting differences between interest rates. But at the end of the day, we must have some hedging using what we call forward contract. And here I would want to use the example that is in that video. This example that is in that video, remember we had an investor, if you remember. The investor had how much? The investor had Kenya shillings, not 6 million, but 10 million. 10 million. In this case here, he has got two countries he can invest the 10 million. He can invest this in Kenya or in Uganda. So the interest rate in Kenya is 15%. And then we have, ladies and gentlemen, in this case here, we have Uganda 25%. And then they have given us the spot exchange rate. The spot exchange rate is Kenya shillings 0.06 per Uganda shilling. And then we have a 6 months forward exchange rate. 6 months forward exchange rate. 6 months forward exchange rate is 0.09 Kenya shillings per Uganda shilling. Can somebody in this case here confirm whether this, if you're writing your notes or you're watching the video, whether this is the kind of example that we had? Whether, ladies and gentlemen, these are the figures here. Remember, the investor plans to invest this Kenya shillings 10 million in how many months' time? Period is 6 months' time. Time is 6 months. Time is 6 months. Time is 6 months. Time is 6 months. Then we have interest rates. Kenya is a little bit lower, 15%. Uganda is 25%. And then the spot exchange rate. Today's exchange rate is Kenya shilling 0.06 per Uganda shilling, or 0.006 Kenya shillings per Uganda shilling. Same. 6 months forward exchange rate, like that. And then we are required here to calculate. Calculate, covered, interest, arbitrage, profit. You calculate the covered, interest, arbitrage, profit. Where do we start this thing from? What should we do if we get this kind of a question? This is very easy. Very, very easy question. Now, ladies and gentlemen, when I look at this kind of a question, in terms of investment, where would you rather invest your 10 million? Would you rather invest these 10 million in Uganda or in Kenya? Would you rather invest this in Uganda or in Kenya? In Uganda or in Kenya? Somebody talk to me. In Uganda, because Uganda, you're going to get a higher rate of interest. And this is why when I saw some politicians in this case here fighting Uhuru Kenyatta, I was wondering. Before, Uhuru Kenyatta had quite a rough time. towards the end of what year? His tenure. So this guy, remember, like America, they have many problems. This kind of crisis that we're going through in Kenya, basically all these great countries are going through it. It's a global crisis. It's a global recession. So like what America is now doing, for them to be able to attract investments in their country and be able to employ their people there, they are raising interest rates. So as they raise the interest rates, what is happening? If we have got some American or even European investors in Safaricom, for example, they simply withdraw the investment from Kenya and that take their investments where? Abroad, where the rate of interest is high. And that is why, for example, today, I was seeing somebody making an argument in the Daily Nation that they don't understand why we have treasury bill rates, we have the government bond, like now there is an infrastructure government bond, which is giving a 16.8% return. Why is the government increasing the rate of interest like that? It's because of what is happening globally. Don't expect even some of these like fuel prices in this case to come. It's to come down. It's a global crisis. So, ladies and gentlemen, we shall always go for those countries which promise us a higher a higher return. So then this is what I will do. This is what I shall do. I hope I've now crammed this very well. This is what I will do. I'll come and compare my two countries. So I'll come here and compare my two countries. My two countries here are, we have here Kenya versus Uganda. Kenya versus Uganda. So this investor is in Kenya here. He has 10 million Kenya shillings. So he has got two options. So in this case here, to invest directly in Kenya here, if he invests in Kenya directly, remember, amount will be principal into 1 plus R. If he invests this 10 million today, because he has this money today. So the principal here will be 10 million Kenya shillings into 1 plus. What is the rate of interest in Kenya? 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 15%. So 0.15 times abracadabra, remember, he has this 10 million for how many months? For 6 months. So we must prorate the 15%. We must prorate the 15%. Can somebody do this proration? And then they give me this amount here. They give me this amount here. So say there, 10 million times into bracket, 1 plus 0.15 times 6 over 12, times 6 over 12, times 6 over 12, times 6 over 12, times 6 over 12. Now, Vinci, I want you to give me the whole answer. I want you to give me the whole answer. I want you to give me the whole answer. Oh, yeah. So according to Fardosa, it is 1075,000. 1075,000. Is it 1,000 or 1075? 10.75. 10.75 million. So 10 million, 7, like that. Thank you very much. These are Kenya shillings. These are KES. The Kenya shillings like that. Great. The other option that this guy has is to go and invest this money in Uganda. But for him to invest this money in Uganda, then he has to convert this. And remember, he's converting this today at spot. Please don't confuse this with money markets. We are converting this today at spot. So is there somebody who is able to see the spot rate? Is there anybody who is able to see the spot rate? Is there anybody who is able to see the spot rate? Anybody who is able to see the spot rate? Yes. So we have here 0.06 Kenya shillings per Uganda shilling. So could you kindly do the conversion for me? Tell me. So the conversion, please convert using your mother tongue. Convert. I love my mother tongue so much. My mother tongue says 0.06 Kenya shillings equals 1 Uganda shilling. How about 10 million? I should be using KES throughout. How about 10 million KES? 10 million KES. So if you cross multiply, what are we going to get at the end of the day? It will be 10 million. It will be 10 million, quite an ugly figure, times 1 over 0.06 like that. Could you kindly give me an answer? According to Josephat Monica, we are getting 166. We are getting 166, 6666, like Saturn's number. 667 Uganda shillings, like that. And then I'll go ahead and invest this amount in Uganda. 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 When we invest it in Uganda, we expect some rate of interest. We expect some rate of return. And have they given us a rate of return in Uganda? Yes, I know amount will be this 166, 666, 67 into 1 plus Uganda is 0.25. Please remember this has to be time prorated. Please remember that this has to be time prorated. So is there somebody who is able to give me this amount? Is there somebody who is able to give me this amount? Abracadabra. According to Gracious C. Precious, and you have a very good name. Gracious, Precious. Great. 187, 187, 187, 500,000, like that. And these are Uganda shillings, like that. Now, ladies and gentlemen, having gotten this 187.5 million Uganda shillings, what do you think shall we do next to be able to get our profit? So remember now, we have to convert this back to our home currency because we have done the investment. Now we are, now we are international investors. We have invested in Uganda, 6 months are over. Now we need to repatriate back our dividends. We need to repatriate back our money. So in this case here, we have a 6 months forward rate. So in 6 months time, so please go back and convert this to Kenya shillings. Convert to Kenya shillings. Convert to KES. Is there somebody who is able to see the forward exchange rate? Is there somebody who is able to see the forward exchange rate? Thanks, Rose. Thanks, George. Yes, Navensi tells me it is 0.09. In this case here, KES per Uganda shilling, like that. So can you kindly convert this amount using your mother tongue? Using your mother tongue. Let's see those guys who have got very good mother tongues. Very good mother tongues. I think the one that sounds very well, very nicely in my ears is the Taita. Taita dialect is very nice. It's very nice. Most of these other mother tongues are not very good. And also, I think Luo is good because Luo is more of is more English, right? So these guys have been able, ladies and gentlemen, to convert already as I make my useless stories here. Some guys have been able to convert. Some guys have been able to convert using, ladies and gentlemen, this one here. I have to rub something here. For me to create space, I have to rub something here. I have to. Great. So I have to come here, ladies and gentlemen, and mention here, I'm converting this. I'm converting this. I'm converting this, and in my mother tongue, we are saying 0.09 KES equals 1 Kenya shilling. How about 187.5? How about 187.5 Uganda shillings? How about, no, yes. It should be 0.09 KES equals 1 Uganda shilling, yes. 1 Uganda shilling, yes. How about 187.5 million Uganda shillings? If you try cross multiplying this and this, you will get 187.5 times 0.09, which will end up giving us something nice. Which will end up giving us something nice, which is 16,750. I don't understand. These figures are quite different. 1687, 5,000. 1687, 5,000. And now remember, these are KES. Now, ladies and gentlemen, please listen and listen to me very well. Listen and listen to me very well. Now I have my amounts. Now I have my amounts. What I will do is to come and do a summary. So amounts, Uganda root. Amount in Kenya shillings. Uganda root is giving me 16,87,500. And then we have the Kenya root. The Kenya root would have given me this. The Kenya root would have given me 10,750,000, like that. So you subtract, you should be able to get the profit of taking advantage of what here? interest rate differences between the nations to make a risk-free profit. So the Uganda route is giving me this amount. The Kenya route was giving me this amount. So at the end of the day, how much will I get as my profit? My profit, I'm being told, is 6,125,000. 6,125,000 Kenya shillings, like that. Case like that. Great. So now the only problem that we normally have with this question is that whenever it comes in exams, and it has come, students are not able to differentiate this question from money market question. But you see, to me, if you're a bright student, you should be able to differentiate, because you see, this one, the examiner will tell you, calculate the covered interest arbitrage profit. The other one, the examiner will expressly tell you, calculate whatever using a money market hedge. So if it is a covered interest rate, what I'll do, first of all, if I'm in Kenya, I have this 10 million. First of all, I'll have the amount growing in Kenya. Do the conversion immediately to Uganda. The amount I get there, have it growing in Uganda shillings. The Uganda final figure converted back, do a summary, deduct. It may look a little bit crazy, but I believe with whatever we have given you guys, you should be able to follow this now video later for you to do what you have to understand. So is that something that I can leave you now to follow the video later for purpose of understanding, so that I can also get a highest chance of doing something different? Will you be able to follow this? Thank you so much. So then if you allow me, I'll be able to look at the triangular arbitrage. So mention there triangular arbitrage. So for those of you who understood this triangular arbitrage, how many currencies are involved in a triangular arbitrage? Triangular arbitrage, how many currencies? How many currencies? 3, yes. That's why we have a triangle. If you ask your young kid, they'll tell you that there is what we call a triangle shape. A triangle shape, that is how they call it. Triangle shape, which has got 3 corners. So in triangular arbitrage, we have 3 currencies. You have 3 currencies. And I gave you an example here, triangular arbitrage. 3 currencies. Remember the question that I gave you? We had an investor who had how much? This investor had $1 million. The investor had $1 million US. Is there somebody who can remind us those exchange rates which were there? I remember there is one, which is dollar per euro. Somebody who can write those things very fast from the example that we have. Exchange rates are given. Anybody who is able to, just somebody who took, and remember, if you want to use those videos nicely, like there is sometime you'll get myself sharing the screen. Times I'm writing on the board. When I'm sharing the screen, that I'm blocking you from seeing. No. What you're supposed to do whenever I share, just take a screenshot of the question. Put the question separately. Right? So you have a screenshot, or you can even write it down. Take a screenshot of the question so that when I'm doing on the board, you will not really be lost. Great. Is there anybody who has those figures who can make reference very fast? I know there is a 0 point something. Abracadabra, 0.9 something. Who is the savior now? I don't want to start watching that video. Who is the savior? Who may have written those exchange rates? And a triangular arbitrage. Do we have some savior, or do we open the video very fast? Where do we share the videos? How comes you don't see them? The videos are normally shared. They're normally shared. Navencia has already given me this. We have 1.9724 US dollar per pound. Thank you so much, per pound. And then we have 1.34500 US dollar per who? US dollar per who? Per euro. Euro, you write an E like that. And then we have 1.4655, 1.4655 dollars. Are these US dollars really? It can't be all of them US dollars. No. I think it should be euros. Euros per dollar. Euros per dollar. Euros per pound. Now I don't know who to trust. I don't know who to trust US dollar. Gracious Precious seems to be a truthful girl. Navensi, the third one. Confirm for me the third one, Navensi. Confirm for me the third one, Navensi. The third one. Oh, Samuel Macau has already confirmed this. Now, ladies and gentlemen, how much do you have? First of all, we have US dollar, pound, and then we have the euro. There are three currencies. So then this has to be a triangular arbitrage. This has to be a triangular arbitrage. This must be a triangular arbitrage. And if that is the case, then, ladies and gentlemen, this is what I will do. I will come here and draw the triangle. So I will draw the triangle like this. So we have here, one of these will be 1.9724 US dollar per pound. Then we have 1.3450 dollar per euro. And then we have, in this case here, 1.4655 euro per pound. So how much do I have? I have $1 million US dollars to play around with. So the question is, with this 1 million US dollars, I want to play around. I want to trade with this in a way that I'll be able to make an arbitrage profit. So then I have here corner A. I can have this as corner B. I can have this as corner C. So for purpose of trading, there is no way I will be able to come here. Because you can see these are US dollars, there is no way I'll be able to fit here because there's no US dollar here. So it means I can either go to A or I go to B because I can see dollar being exchanged to pound. I can see the dollar being exchanged to euro. So now the question is, should I start with A or should I start with B? Pata potea. Where should we start our trade from? Where should we start our trade from? Is it at A? Is it at B? Is it at A? Is it at B? Pata potea. Pata potea, pata potea. The weak currency, right? The weak currency, yes. The weak currency, yes. However, you can always use trial and error. Make mistakes. So, ladies and gentlemen, when you look at this reads as follows. It is $1.9724 equals 1 pound. And then we have $1.3450 equals 1 euro. So the question is, between the euro here and the pound, which one is weaker? Which one is weaker? You can see to buy 1 pound, you need 1.97. To buy, in this case here, a euro, you need $1.345. So here I need fewer dollars. So the euro is weaker. The euro is weaker. The euro is weaker. The euro here is weaker. You can see the euro is cheaper. It's cheaper. The euro is cheaper here. In terms of dollars, the euro is cheaper. Always start with the cheaper currency. Start with the cheaper currency. So cheaper currency, ladies and gentlemen, is the euro. So in short, start with B. So in this case here, what you're telling these guys is that if they're starting from B, is that they should buy euros. So buy euros first. So in this case here, buy euros first. Buy euros first. Buy euros first. Great. So then I'll use my mother tongue. I can see $1.345 equals €1. How about 1 million? How about $1 million that I have now here? So I'm coming here. So abracadabra, please cross multiply. What are we getting here? It will be 1 million times 1 over 1.3450, which will end up giving us what figure? Which will end up giving us what figure? Abracadabra. Abracadabra, we start by buying euros first. So when you cross multiply, see it is this divided by this. So what are we getting? According to Josephat Ouma, who has forgotten that here we don't want decimals, really, it is 743. Josephat Ouma tells us it is 743, 494, 494 euros, like that. Now, ladies and gentlemen, I believe everybody has been able to get this figure. Could you kindly put your thumbs up like this? If in this case here, you are together with me here, as far as 743, 494 euros figure is concerned. Ah, great. I can see one thumbs up there from Fardosa. Thank you very much. Now, from here, do we go home, or what do you think will be the next step for us? What do you think will be the next step for us? What do you think will be the next step for us? What do you think will be the next step for us? What do you think will be the next step? Now, remember, we have euros, and we've been able to exhaust this. Now, I will go to the next corner, which has got euros somewhere. Next corner, which has got euros, is this. So now I have euros, so I'll talk of this. So I'll say, next, buy the pounds. So buy the pounds now. So now we are buying. Do we buy euros? Remember, lady, we have euros Navensi here. We have euros. Now we can't buy euros again. Navensi, are we together? We have euros. Now you can't say again, buy euros, because you have euros. Now you look at this. This is the only corner where you can go with your euros and buy the pounds. So you buy the pounds. Yes, buy the pounds now. So mention there, buy the pounds. Buy the pounds. So in this case here, we are buying the pounds. So buy the pounds. Buy the pounds. So we are buying pounds, and we know that's corner C. And we know the pounds rate is here, 1.4655 euro equals 1 sterling pound. How about, unfortunately, I rubbed my figure here. I'm so stupid. Can somebody remind me the euros that we had here? Somebody remind me the euros. I've rubbed mine. Those euros here were how many? The euros were how many? Euros were how many? No, Josephat, you are cheating me. You are cheating me. 743. Thank you, administrator. 743, 494 euro. So this one will be equal to, when you cross multiply, abracadabra, you will get what Josephat has given us. This will be 743, 494. We have euros times 1 pound D divided by 1.46555 euro. Which will give us what figure at the end of the day. So I'm being told, ladies and gentlemen, that this is what here? This is 507, 331. 507, 331 pounds. 331 pounds like that. Thank you very much. Now from there, could you kindly give me the next thing? So I've used this. I know, because I must touch on the 3 corners of my triangle shape. So what am I supposed to do next? Abracadabra. Abracadabra, what am I supposed to do next? I'm waiting to hear from you guys. Now we buy US dollars, yes. Convert to US dollars. You can also use the word convert. So in this case here, come, ladies and gentlemen, here, and buy US dollar SIM. So you buy US dollars. So you buy US dollars. Buy US dollar SIM. Buy US dollars. So these US dollars, we have the rate there. It is $1.9724 equals 1 pound. It's a pound. And unfortunately, we happen to be having the pounds. And this one has not disappeared. We have pounds, how many? pounds 507, pounds 507, 331 pounds, like that. So when you cross multiply, this times this, itakuwa 1.9724 times 507, 321, which will give me how many dollars? 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 I'm getting here, I don't know how Josephat is getting those dollars. We are getting here $1,000,670, like that. And remember, when we started the business, we had how many dollars in total? At start, we had how many dollars in total? At start, we had how many dollars in total? $1 million. $1 million. $1 million. So are you able to see the arbitrage? Are you able to see the arbitrage gain? Are you able to see the arbitrage gain? Arbitrage gain will be 670. 670. So this will give you about 67,000 or 75,000. Nowadays the rates are quite bad in terms of what your Kenya shillings. Not bad. This can really add a lot of love in your family. Your family can say with 75,000, I'll take my kids, in this case, your family, I mean, out. Yeah. And remember, you have earned that money without sweating. You're just using a computer like this, moving money from here to here, like that. You are that's the proper definition of an international investor. Proper definition of an international investor. I'm being told by Kyoko that we should use 660. We should use 660. So who is now telling me the truth? But again, why should we fight over $10? Should we use 660? So is this 60 here? Is this figure 60 there? Yes. So then this has to be 60 like that. 60 like that. Thank you so much. We shall overcome. Thank you so much. Great. Now, if you allow me, ladies and gentlemen, I will be able to go to, or rather before I continue, are these guys really able to follow? Are they able to follow? Are they able to follow? Are they really able to follow? These guys, are they able to follow? Great. Thank you so much. Thank you so much. Thank you so much. Thank you so much. To confuse students, at times we'll give students, just to answer your question, at times in this case here, we shall give students this kind of exchange rates. So we have, for example, somebody will come and tell you it's 100 Kenya shillings per dollar. And then, or it is $0.1 per what here, somebody per Kenya shilling. Now, if you look at the exchange rates given in that question, there are other exchange rates given there. Basically, to get this, what I've done, I took 1 divided by 100. So if we decide to work with this, then we shall disregard the others because they're the same thing, only that one is an inverse of the other. One is an inverse of the other. If you try, just go inversing whatever we have on the other side, you realize that there is no difference. I hope I've answered you, because you see, when you reverse the dollar, it's 1 over 100, 0.01 or something, 0.01 actually, 0.01 dollar. Okay, great. So if you allow me, then I'll be able to go straight away to the covered interest arbitrage, not covered, but locational. Great. Now we go straight away to the locational arbitrage. So under locational arbitrage, I would want us to write there that locational arbitrage, we are writing there, locational arbitrage is a process of buying a currency, at a location where it is priced cheaply. And immediately selling it at a location where it is priced higher. So basically, whenever we talk about locational arbitrage, here we are trying to make arbitrage profits by buying, in this case here, a currency at easily. Put that currency in your bag, run with it to town center, and you sell it at a higher price. By doing so, then you'll be able to make what we call a locational arbitrage profit. A locational arbitrage profit. Great. So then come here, and then we get to look at this question. So we have a very interesting question, ladies and gentlemen, very interesting question here. Very interesting question. A very interesting question. So they have given us what we call South Bank. So we have here the South Bank. Then we have here the North Bank. We have the North Bank. So South Bank, we have bid and ask. Then we have bid and ask. Okay. So I'm going to have here a New Zealand dollar. So here we have US dollar 0.635. US dollar 0.640. Then here the bid is US dollar 0.645. 0.645. And then we have ask at 0.650. So an investor has US dollars 1,000 required advice or determine the locational arbitrage profit. Locational arbitrage profit. Great questions there. The last part. Okay. So I've seen some good questions there. So we are saying, ladies and gentlemen, that under the locational arbitrage, we have got how many locations? 2 specifically. 2 locations. And ladies and gentlemen, you will be getting this currency from a location where it is sold cheaply. And then you go ahead and do what here, somebody sell it in another location where it will be able to fetch a higher price. So that's a locational arbitrage. How different is it from the covered? Covered, we said, we have got forward contracts, like forward exchange rate. There is no forward contract here. Okay, great. So now, are we ready to do this question? 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 Are we ready to do the question? Are we ready to do this question? So perhaps I can repeat again as I wait for you guys to give me the response. Under this concept of locations, you are basically exploiting price differences of the foreign currency between two locations. So you'll buy a foreign currency at a location where it is sold cheaply, and buy this, or rather sell the same currency at a location where it is going to fetch a higher price, And then the difference, of course, will give you a locational arbitrage profit, You guys, I would want you to release me to move forward. Once you are ready, once you've been able to write the example up to here, and at least you are somehow, you can't be 100%, okay? Please put a thumbs up. I continue. Not visible, okay? So in this case here, determine the locational arbitrage profit. Determine the locational arbitrage profit. Determine the locational arbitrage profit. Thank you. Great. Now I should be able to continue then. Now, ladies and gentlemen, this question has got only one problem. Only one. Once I'm able to really understand where the problem is, then this one will be okay. You see, these are dollars given here. These are dollars given here per 1 New Zealand dollar. So basically, these are US dollars per New Zealand dollar, like that. I forgot to tell you one thing, that the investor in this case is based in New Zealand. The investor is based at New Zealand. So the investor, ladies and gentlemen, here is a guy who comes from New Zealand. Although this examiner has given us a hint, but if this guy comes from New Zealand, where is the home currency? The home currency is on the right. So then if they give us something like this, 0.635 to 0.640, I should be able to know the buying rate. Because New Zealand is on the right, this becomes buy. And this becomes who? Sell. Buy is the same as what here? Somebody? Buy. Buy. Just a minute. Great. Now, so in this case here, we have here sell, buy. Sell and buy. Because New Zealand is here on the right. Home currency on the right. So the right figure becomes buy. This other figure becomes what here? Sell. Now, buying rate from the bank's perspective, the buying rate is known as what here? Ask. The selling rate is known as what here? Bid. So fortunately, they are given us the asking rate, the bidding rate. So they're selling this to us, asking for this much to be able to sell what here? To be able to buy a New Zealand dollar from you. So fortunately, they are done that. So that's very good for me. Now, ladies and gentlemen, please listen and listen and listen and listen to me very well. We have here 1,000 US dollars. So these are 1,000 US dollars in this world called New Zealand. We are going to sell. The investor is going to sell this to the bank. So the question will be, which bank do you think will this investor sell his $1,000 to? These dollars are being asked here by Southern Bank, and then we have also Northern Bank asking at this rate, wanting to buy them at this rate. So who do you think will this investor sell his $1,000 to? Who do you think will this $1,000 investor, $1,000 Northland? Okay, so let's see how much. The easiest thing is for you to see how much shall we get if we sell. Now it's ourselves. You know, the bank is buying. If we sell, if the investor sells to Southern Bank, if investor if investor sells the $1,000 to South Bank, revenue will be equal to who? You know, these are dollars and these are dollars. You can't multiply them. So I'm going to talk of $1,000 divided by $0.64 per New Zealand dollar. Can somebody give me this revenue that this guy will get? This guy will get what revenue? Just try. It's try and error. If he sells the $1,000 to South, and remember here, when you are exchanging, you can also use your mother tongue. You can come and talk of 0.640 US dollar equals 1 New Zealand dollar. How about $1,000? How about $1,000? How about $1,000? You can also use your mother tongue. Okay. Or 0.635. Apana. Kumbukeni hapa tumesema namna gani? Tumesema ask. The bank will be buying. Ngoja kidogo. The bank will be buying. This is the ask. Remember who has this money? The person who has this money is the investor who has 1,000. So the investor will be selling to the bank. So on the other side of the coin, the bank is asking. Right? If the bank is the one that is selling the $1,000, it will bid. It will bid. Right? So you shall understand, don't worry. So in this case here, wananipatia figure, wananiambia ni 1563. 1563, 1563, 1563 New Zealand dollars. What if the investor sells these to North? If the investor sells to North, if the investor sells to North, if investor sells to North, if investor sells to North, to one and North, want to ask at what rate? So in this case here, we shall get revenue. The revenue will be $1,000 divided by 0.65. How much are we getting here, somebody? If we sell to North, how much shall we receive? 1538. 1538. Where are you better off? You as an investor, where are you better off between the two? Where are you better off between the two? We are better off in South. We are better off buying, or we are better off selling our $1,000 to South because we fetch a higher amount. So conclusion there, we are saying that the investor will sell. The investor will sell the $1,000, will sell the $1,000 to which will sell the $1,000 to the Southern Bank. Will sell the $1,000 to Southern Bank, 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 to Southern Bank. Great. So in this case here, we are in agreement that if we sell to Southern Bank, we are going to get 1563 New Zealand dollars. New Zealand dollars. Thank you so much. So I'll come and wrap this. Now, remember, in locational arbitrage, even the $1,000, you don't have them. All right. These $1,000, you also need to buy them. Now listen and listen to me very well. Listen and listen to me very well. We have said this time round, we are going to sell, first of all, the $1,000 to who? To South Bank. So meaning that if we sell to Southern Bank, then we shall buy from which bank? You can't buy from the same bank. Now you shall buy this from the other bank. So you buy from the Northern Bank. A little bit confusing, but you'll get used to this. We buy from the Northern Bank. So if we buy from the Northern Bank, how much will this cost us? If we buy from the Northern Bank, how much will this cost us? If you're buying this from the Northern Bank, how much will this cost us? How much will this cost us? Can someone talk to me? I'll explain, don't worry. If you're going to buy $1,000 from Northern Bank, if you buy, so in this case here, I'm looking at the cost of buying $1,000 from $1,000. In this case here, from $1,000 from Northern Bank, from the Northern Bank. How much are we going to talk about, ladies and gentlemen? Abracadabra, I'm waiting. So remember, this time round we are buying, right? This time round we are buying. So the bank is bidding to us. The bank is selling. We shall overcome. So remember now, there is no confusion at all. Once you have been able to know where you are starting your transaction from, getting the other transaction is never a hard thing. It's never a hard thing at all. There's no confusion there at all. Now we are in the Northern Bank. So Northern Bank, remember now we are buying. The investor is buying, not the bank. The investor is buying. So in this case here, if we sell to Southern Bank, the investor, we are the investor here. And the investor, we have decided to sell to Southern Bank. Then we again, who? The investor. The investor shall buy. So basically here, it is the bank. The bank will sell. The bank will sell stroke bid to the investor. Here. And the investor bidding is here. So we are saying here that, ladies and gentlemen, the cost here will be the $1,000. You divide this by 0.645. What figure are we getting here, somebody? 1,000 divided by 0.645. So the bank will sell stroke bid to the investor at 0.645. US dollars per New Zealand dollar. So they're giving me a figure of 15 what year? 1550 New Zealand dollars. 1550. So, and they're even going ahead to give me the profit there. So the profit will be how much? The profit in this case here will be how much? The profit will be how much? The arbitrage profit will be how much? So you can see the cost here is this. The cost is this. And we had some revenue up there of 1563, if I remember. We had some revenue of 1563. Depending, just what I can see, you had 15 or 62. But in this case here, the profit will be 1563 minus 1550, which gives me 13, like that. 13 New Zealand dollars, like that. Listen. Hii biashara ya dola lazima mmeshafanya sana. Hata mimi najua nyinyi mmefanya. Normally what happens, if you allow me, of course, I will repeat this and repeat this. Remember here, you don't do like the triangular moving round. No. Here, ladies and gentlemen, if, for example, you have ever done this, So you'll get a situation where you want to trade in dollars. And you have what here? You have Kenya shillings. So then what do? First of all, you have to procure the Kenya shillings. Like you procure, you procure the dollars. So you want to buy, for example, $10,000. So these $10,000, then you have to ask yourself, how much they cost you? And when you sell them, how much in this case here are you going to earn? So under locational arbitrage, I would want to repeat this, ladies and gentlemen. You must, first of all, they have told you that in this case here, you have $1,000, all right? So these are $1,000. How am I going to sell them? Remember, the banks, when you have this, the banks will ask from you. The banks will ask from you, all right? And now once I sell, I must ask myself, because I'm a person who comes from New Zealand, there is no way I was born with this US dollar. I must have bought them. So these are $1,000. I must have bought them. How much did buying these $1,000 here cost me? So I'm able to get the cost in my home currency. And then I should be able to do what here to deduct? I should be able to deduct. So remember what I've done here, ladies and gentlemen. If I repeat this very fast, and I know where the problem normally comes in, the problem normally comes in defining the first transaction. So in this case here, what do we have here? If you remember, the New Zealand, this is $1 New Zealand dollar. The $1 New Zealand dollar, what do we have? What we have here is 0.635 in terms of US dollars. This one is 0.640. 0.640 in terms of US dollars. So bid here is 0.645 in terms of US dollars. This is 0.650 in terms of US dollars. Now listen, how much do I have here? Before I ask myself how much this cost me, what I have is US dollars 1,000. And this client is based in New Zealand. That's what we said. So this US dollars 1,000 is foreign to him. He would want to exchange this to home currency. So then it will go with this 1,000 US dollars to a bank. So the bank will be buying from him. And we have said, simply because these are US dollars per what here, somebody per New Zealand dollar. Given that this guy comes from New Zealand, the home currency is here. And if the home currency is on the right, then automatically, if you are given these figures, if this was like this, I would have known that this is the buy because home currency is on this side. So if this is buy, then we call it what here? Somebody ask. This is bid. Bid means the bank is selling to us at this rate. So when I have this 1,000 US dollars, so the bank will be buying this from me. So what I'll do, so if the bank is buying from me, they're asking for me, I will come and do, in this case here, a test to see between Southern Bank and Northern Bank, which one is going to give me more money. That's where I'm going to start from. And we were able to do our abracadabra. We came and did some tests on revenue. So we said revenue, if in this case here we go the Southern way, the revenue out of this 1,000 will be $1,000 divided by the ask, the bank is asking to buy. The bank is buying from us at this rate, which is 0.640 like that. Can somebody remind me this figure? Can somebody give me this figure? If we buy from the South, how much were we getting? If we buy from the South, how much are we getting? 1563 years. 1563 years. Great. If we go to North, and in this case here, we are selling ourselves to North Bank, then in this case here, we get 1,000 divided by 0.650 like that, which is giving us how much here, somebody? Which is giving us how much here, somebody? Stroke it afadhali. Which is giving us 1538, which is giving us 1538. Now you close this thing by saying that South is giving this guy more revenue. So we are in agreement, all of us, that if it comes to selling, then we shall sell to Southern Bank, Southern Bureau. We are selling to Southern Bank. Now, ladies and gentlemen, listen and listen to me very well. If I'm selling to Southern Bureau, then automatically, there is no way again I will buy from them. There's no way I'll buy from Southern Bureau again. If I'm buying this thing, if I'm selling this thing in one bureau, I must have bought this particular currency from the other one. All right. So in this case here, we have said that we are selling this thing to Southern Bank. Therefore, we are buying it from Northern Bank. We are buying it from Northern Bank. And if you are buying it from Northern Bank, then we know as we are buying this 1,000. We always go back there. We are buying this 1,000 US dollars from Northern Bank. So if you are buying, the bank is selling. So the bank will be using the bid price. And then whatever you get, you shall be able to subtract and give us what here, the profit. So please, I would urge that you get time to watch this video and ensure that you watch it in a very serious in a very serious way. Otherwise, great.